Like many expats, your goal is to buy your own home in Germany. But you're probably wondering, how much money do you actually need to afford a place like this or this? In theory, building property in Germany is possible. But like everything here, there are many factors you need to consider before you can buy your dream home. As a general rule, your monthly loan payment should not exceed 35% of your net household income. But at the same time, interest rates in Germany are still higher than they were over the last decade, and those low interest rates in the past pushed property prices up. That's why homes in Germany are more expensive than ever. On top of that, not enough new homes are being built, which pushes prices even higher. That's also why more than half of the people in Germany still rent. But if you're thinking about buying, the big question is, can you actually afford it? Because when it comes to housing, there's a big difference between renting and buying. And as you will see, the costs are very different depending on which path you choose. For example, your rent is usually the most you'll pay each month, but your mortgage is the minimum you'll pay. As a renter, you pay your cold rent or Kaltmiete, which is fixed, and additional costs, the Nebenkosten, which may vary a bit depending on your usage. But you usually won't face big surprise costs. As a homeowner, it's different. You have your mortgage, but also repairs, insurance, maintenance, and many other costs, which we'll go through in detail. By the way, if you're new here, my name is Ahsan, and on this channel, we talk about how to move beyond the middle class in Germany. So buying or building a home in Germany is a decision most people only make once in their life. And it comes with major financial responsibility. That's why the first step is to understand your financial limits. To do that, you need to answer 3 questions. How much can I afford monthly? How much financing do I need? And what loan fits my situation? As mentioned earlier, a common rule is that your loan should not exceed 35% of your net income. To calculate this, just take your net monthly income, multiply that by 0.35, and that's how much your payment should be per month. So for a 3,500 euro net salary, that gives you about 1,200 euro per month. At 4 to 4.5% interest with 20% down, that is enough to buy an apartment in the 170 to 190,000 euros range. Of course, if you're disappointed that a 65,000 euro salary is enough only to afford a 200,000 euros home, you are not alone. And if you want something to blame, it's the extremely low interest rates in the past, the German bureaucracy, and the horrendous low amount of real estate being built in Germany. Just consider that when mortgage rates were at sub 1%, the typical 65,000 euros income was enough to buy a home in the 250 to 260,000 euros range. But now, with costs having increased, that final number is significantly lower. And remember, this is the absolute maximum amount, and you should be looking for something under this range. That's why under the 35% rule, you would need to be making about 130,000 euros a year to buy this 500,000 euros house in Stuttgart, or 280,000 euros per year to purchase this 1 million euro house in Munich, with monthly loan installments of 2,500 and 4,800 euros respectively. With this rule, the monthly loan installment should always be lower than your monthly financial resilience. Here, a monthly expense sheet is a good starting point to figure this out. It is best to record all monthly household costs, special expenses, and living expenses. I have a free template on my website, linked below the like button, so that you don't forget any expense. The money left over now shows your real financial buffer. A sample calculation for a family of 3 might look like this. Now, house owners do save on rent, but still have to bear Nebenkosten like renters and other costs on top of that. This is why some people use the 2 euro rule, which says you'll spend 2 euros for every square meter of livable space every single year for maintenance and running costs. The monthly expenses sheet is the basis to determine how much house you can afford in Germany. Because without looking at your household expenses, you will not have an overview of your liquidity. In particular, you will need to know what expenses you will incur, However, this alone is not enough. You also have to consider the key factors involved in financing a home as well. Now, it will definitely benefit you to have an honest and realistic check. The more precisely you estimate your income and expenses, the less likely it is that the financing calculation will fail. To be on the safe side, please also include an emergency fund so that unplanned costs do not lead to future problems with your loan repayment. Have you considered what you would do if you or your partner lost your job? And how many months would you be able to survive without a job? I want you to include this variable in your calculations because in the past, someone I knew went into kurzarbeit and so did their spouse. They were not able to stay afloat and had to sell their property. So now once you know your financial resilience, the next step is equity. Unless you've been saving for many years or hit the jackpot, it's unlikely that you would buy a house in Germany with complete cash. That's why you are going to need real estate financing. When you take out a loan, you can pay monthly installments and those include interest and repayment component. It's important to know that up until a point, the more equity you bring in, the lower the monthly financing burden, as equity lowers the interest cost of your home loan. The type and price of the property also play a role, but for simplicity's sake, we are going to skip those factors. So as someone who is interested in buying a house in Germany, real estate buyers can include cash, funds in the bank account, securities such as stocks or ETFs, life insurance payouts, and many other things. But all of these depend whether you want to get a loan on a property you want to build or buy. Banks assume that around 20 to 30% equity is good for real estate financing. This is essential to how much house you can afford in Germany because the less real estate loan you need, the lower the repayment amount to the bank. Please hit the like button if you're getting value from this video, hit the hype button if you see it, and consider subscribing. Coming back to equity, the percentage of funds you bring doesn't just reduce your credit ratio. You may also receive better conditions than other borrowers. That's why a lot of savings can mean lower interest on your loan. Anyone who has already saved up their own funds is considered trustworthy by the banks. But make sure that you keep your emergency fund separate from the equity. So you have calculated your financial resilience. You know how much equity you can bring in. What else do you need to know before you buy a house in Germany? One of the biggest expenses you need to consider is the Nebenkosten, or the closing costs of buying a house in Germany. Banks usually do not finance any additional purchase costs. You as the borrower must cover at least these costs from your own funds. And depending on the federal state in which the property is located, the closing costs are between 10 and 15% of the purchase price. These costs should not be underestimated, as they play a huge role in figuring out how much house you can afford in Germany. These additional costs are due for payment at the notary immediately after the purchase contract has been concluded. Now, there are other costs that you should consider too, like expenses for moving and new furniture, and if necessary, modernization or repair costs. Trust me, you will need to do some repairs when you buy a house in Germany. It won't be necessary, but you will do them nevertheless. Don't forget the ongoing additional costs weighing on your monthly budget. They include the annual property tax as well as premiums for home insurance and natural hazard insurance. Just keep in mind the things I have mentioned in this video are general guidelines, and each property and financial situation needs to be assessed individually. But let's say you don't want to bring in any of your equity and want to buy a house with zero money. In this video, I share exactly that. And in this video, I share 7 habits keeping you poor.